Hello guys, now I want to teach you another very simple trading strategy that you too can use in your trading, and this strategy gives over 60 to 65% winning rate. So that is, you win most of the time with this strategy. And this strategy is very simple because you just need two indicators for this strategy, and the two indicators you need for this strategies, I taught you how to get indicators, are MACD, which is a trend line indicator, and moving average, which is also a trend line indicator, because this strategy is meant to help you understand what direction is the trend. So you go to MACD, then you also search moving average. So we are using moving average, simple moving average. So once you've clicked on those two indicators, you want to now set the both indicators. So for MACD, you can leave MACD like that. The histogram and every other thing regarding MACD, you can leave it like that. The entire MACD setting, you might just decide to close the histogram for MACD, or you can still choose to leave it like that. But for MACD, you can still also decide to change the colors if you don't like the color. Like me now, I would prefer, I have black here as this color, and I would prefer the lines to be bolder than this. So I'm changing the lines to look a little bit bolder so that I can be able to see it happening as the chart is moving. And that's all. Then for moving average, you want to use, so this is for MACD. For moving average, you want to use simple moving average, SMA, and inputs. For this, I want it to be black, or let me make it green. Let me see what green could look like. Green, this green is okay. I'll prefer it to be black. Then the width, I want it to be a little bit bold, then I'll prefer it to be black. Okay, green was okay. So I want to ensure that I change the length here to 200. So we're using 200 moving average for this strategy. Now this strategy works best on lower time frame because you'll be able to get quick entries on entry time frame, from 15 minutes to 1 minute time frame. So what you want to see is that for this trading strategy, you want to see that price is resting above the 200 moving average or below the 200 moving average. One, that is your first thing you want to see for this strategy. Then secondly, you want to see that the moving average, that is the MACD, is above the average, that is above the middle point or below the middle point, and it has moved, that is, it has curved from a bullish direction to a bearish direction, or from a bearish direction to a bullish direction. So what did I say? You want to see that price for the moving average is above the 200 moving average. So you might not get trades every day, but for the days you are going to get trade, the trade is most likely going to be a winning trade. Then you want to see that, secondly, you want to see that the MACD is for a buy trade. Now this is a buy trade in a bullish scenario. You want to see that the MACD blue and black line is below the average, that is the midpoint. This is the midpoint of the MACD, is below the average and has started switching up to the upside. Then you put your take profits at the next high. So we have this as a very clear example. Let me mark it out, this area, so you can see the MACD switching up, and you can see that moving average, the price is above the moving average. So with that being said, let me make this a purple line. So with that being said, we have our first entry. So you put your entry, your first entry here. Your stop loss should be below the previous low. So this is a buy scenario I'm giving you guys here, and your take profit should be above the next high, which is here. So if we were to mark this next high here, which is here, you can see if we should trail it, we definitely hit take profit. So this is what you want to see in the strategy. So we have two possible entries, one here and another one here, with the same logic that we used to get the first entry, the same logic we used to get the second entry. So whichever one you are taking would have given you a profit, and this would have been a 1:5 risk to reward. So for this strategy, the downside is that the 1:5 risk to reward trades give you a higher probability of win, goes as far as 70% win rate, than a 1:2, 1:3 risk to reward trade. And even a 1:1 risk to reward trade gives you a higher probability, but the 1:5 risk to reward trade are mostly the best ones to trade. Now see another very good example. The MACD is below the average point here, but price is above the 200 moving average. We have it here, you can see it here. Price is above the 200 moving average here, and also here. We don't want to buy from this level, long position. We put our stop loss at the previous low, take profit at the previous high. You can always edit it to be 1:5 risk to reward. So long your take profit is here, you want to put your stop loss at 1:5 risk to reward. So this time around, most times it is where your take profit is that will determine where your stop loss is, because you are looking for a 1:5 risk to reward, and you see the trade went up and it take profit. Now this is a losing scenario for this strategy. You can see it. This is a losing scenario where the market was above 200 moving average. Your take profit is here, but your stop loss is at 1:5 risk to reward here. The market went up a little bit and came back to hit your stop loss. So that would have been a losing scenario. But I want to look for another winning scenario where the both confluence, and you can see another winning scenario here. This is a winning scenario. The market came, you can see the MACD is below the average, then take profit above the previous high. If you had done a 1:5 risk to reward, which is around here, this would have been a very good trade for you, and you would have been able to make a very good. You can also use this area too as another example. You can see this area, another example, 1:5 risk to reward trade, and you would have gotten a very good trade, and so on and so forth. Then in a bearish movement, the same thing we want to see. For example, here we want to see the market moving, price is below the 200 moving average. For example, here we have a very good bearish scenario for here. Price is below the 200 moving average, and we can see that the MACD is crossing below, and we want to take this trade here. Our take profit is going to be here, so our stop loss is going to be 1:5 risk to reward around here, and we would have gotten this good entry, which is about 16 pips profit target. Then another sell scenario. Let's go back into the market and see if we have more sell scenarios here. Okay, you can see this sell scenario here. Okay, this is not a good one. This should have been a good one. But this is loss scenario. Let's go look for more sell scenarios. Okay, we could have been able to use something like this here as another sell scenario, which, let's say we're targeting this area as our profit target. Then we look for a 1:5 risk to reward trade, 1:5 risk to reward, and you see the market hit our take profit. So this is another buy scenario, I guess. Very clear. You can see it, MACD 200 moving average, buy. You can see this scenario too, MACD 200 moving average, buy. And it's a trend because we know these two indicators are trend indicators. So we know that most likely when the market is trending in a particular direction, not when the market is ranging, because when the market is ranging, we might be getting false signals because of the market is ranging straight in a particular direction. But when the market is in a trend, we get some very good signals. Like you can see this buy trade here. You can see we have these sell scenarios here. We have, okay, we're getting to the end of the chart here. Let's go to another time frame. Let's see if we could have another scenario. Another thing you should take note is that this thing mostly works on single time frame analysis, not multiple time frame analysis. You are analyzing for only one time frame. All your entry and your exits are on one time frame. Now this is another very good scenario here, 185, and we say let's target the next low, which is this next low here. And you can see the market came into it. 185 risk to reward. If we had a 185 risk to reward, something around here, 185 risk to reward, making the trade very safe, would have had a very good profit. Or we could put the stop loss at the previous high here, would have had a very good profit. Another sell scenario, let me see, this is another very good sell scenario, another very good sell scenario. You can see this two sell scenario here, very good one. You can see the next sell scenario here, which is also a very good one. Another sell scenario. The market is below the 200 moving average, and we're targeting the next low. Let's see where the next low is. Okay, we have all these lows here. This is going to serve as a breakout. Would have just been able to take any trade from here, 185 risks to reward, and would have gotten a good trade. So this is going to be very good for you as an intermediate trader. You don't need to do too much analysis. You just have those two indicators on the chart, and whenever you come and you see the thing setting up, you see the market setting up, you don't want to do it on a ranging market, because a ranging market is going to give you a false signal. Like for example, see this area here, you would have been able to take this sell trade and cut to this very low. Look at the very nice entry here as market started changing direction. 185 risk to reward. Your profit target is here. If you have done a 185 risk to reward, 185 risk to reward will be around here. Market is very safe, and you'll have been able to catch this profit target, 67 pips. And another trendy market, you can see this area. Okay, you can see this area here, and that example here, very clear example. If we say we should even target this low here, which is like this, we'll have gotten 185 risk to reward, and we'll have gotten a 55 pips take profit target. So that's that for this trading strategy, MACD and 200 moving average trading strategy with a 1:5 risk to reward win rate and a 60% win rate. So that's that for this strategy. It's very good for people that don't have time to always come to the market. They just want to come when they get this strategy. They see that the market is moving below 200 moving average already. They wait for the MACD to come back above the half point. Then they look as the MACD starts to change and break out. They look for their entry, target a 1:5 risk to reward based on the take profit, not based on the stop loss level. Now it's based on take profit. When you know where your take profit wants to be, or where you're targeting as your take profit, yeah, you move your stop loss to suit 1:5 risk to reward, and you leave the trade to run, and you most likely will hit take profit, because your take profit is already setting. Your stop loss is where you know that if the market goes against you, you don't want the market to go that far. You want to get out of the market, you put your stop loss. So that's that. Have a nice day, guys.